Everyone has the right to go where they are treated the best. However, how this belief is applied varies from person to person. If you are a high net worth individual, or even an ultra high net worth individual, your needs are likely to differ significantly from those of an entrepreneur who earns a living but does not have as much wealth to invest. When it comes to settling down or establishing a base, moving where you're treated best undoubtedly involves varied personal tastes. But one choice we should all share is finding a tax-friendly or even tax-free place to call home. Hello everyone, and welcome to a brand new video on the channel. Today we are going to talk about the top 10 countries with the best tax benefits for expats. Before we get started with the video, don't forget to smash the like button, share the video, and subscribe to the channel. Now let's get started. Number 10. Belgium. The reality of capital flight is demonstrated by Belgium. There are some taxes to pay in Belgium. You will have to pay income taxes. In Belgium, capital gains are not entirely tax-free. Whether capital gains are taxable depends on whether they are realized privately or can be applied to professional or business activity. Your action may qualify as speculative and expose you to a 33% capital gains tax, for example, if you sell your shares soon after buying them, or if there is a significant discrepancy between the purchase and sale prices. Capital gains are taxed at the usual corporate income tax rate of 25%. Only the corporate tax will be 25%. All other capital gains requiring substantial participation will only be taxed at 16.5%. Number 9. Monaco. Glamorous Monaco, one of the world's most well-known tax havens, has always attracted the super-rich. The tiny country has no capital gains tax, with the exception of French nationals. Monaco generally respects capital gains with no taxation because it realizes the benefits of providing a tax and economic climate that are favorable to foreign wealth. If you're a successful business person looking to increase your investments, the Principality offers a number of residency possibilities and could be an important part of your capital gains strategy. Number 8. Hong Kong. For many years, Hong Kong, one of the best places on the planet for investors, has boasted the world's freest economy. Furthermore, the Chinese Special Administrative Region is a refuge for foreigners, attracting specialists and bankers from all over the world. If you go to a view bar on a Wednesday night, you are more likely to meet someone from Long Island than from Hainan Island. As part of its culture of property respect, Hong Kong does not tax capital gains. The exemptions are employee-provided shares that are subject to the city's flat income tax rate. Unrestricted shares and options, on the other hand, are exempt from capital gains taxes. The possible difficulty here is that expats who leave before obtaining the full value of their shares will certainly owe tax in two nations. Update. Hong Kong's status as the world's freest economy is doubtful as of 2020. This is why variety is so important. You should never put all of your eggs in one basket because even the world's freest economy can endure downturns. Number 7. New Zealand. According to the Heritage Foundation, New Zealand has one of the world's only 6 free economies. The United States is not one of them, providing stability and independence. It is also becoming a popular safe haven jurisdiction. In New Zealand, there is no capital gains tax when selling stocks or other investments. Although there is formal legislation stating that real estate purchased with the intent to sell may be subject to capital gains taxes, it is rarely enforced. The Labour Party proposed a brand new capital gains tax a few years ago, only to suffer their worst election results in years. Number 6. Vanuatu. Individuals' personal income, inheritance, capital gains, and capital exports are all tax-free. For $300 per year, businesses can secure a 20-year exemption from corporation and other taxes. Vanuatu has not signed tax treaties with the majority of countries. Hence, a Vanuatu passport holder may be obliged to pay taxes in another country. Vanuatu also has the quickest citizenship program. For around $130,000, a second passport can be obtained in 1 to 3 months. Vanuatu passport holders can enter the United Kingdom, Singapore, and Hong Kong without a visa. It also allows you to apply for a 5-year, multiple-entry tourist visa in the United States. Vanuatuans will still need a visa to enter Schengen nations. Number 5. Jersey. Jersey is one alternative that few people discuss. It is linked to the UK because it is a British Crown dependent, but it administers its own affairs, allowing it to enjoy a relatively tax-friendly regime. You may run a business from Jersey and pay almost no tax. You can alternatively apply for residence as a person of means, which requires you to pay a flat tax of £145,000. So if you make millions of dollars a year, this is an intriguing possibility, especially given its close ties to the UK and proximity to London. Number 4. Cayman Islands. The Cayman Islands are undoubtedly the most notorious of the Caribbean island republics that do not have taxes. Their financial services industry is thriving. As a result, it is competitively priced. Except for beautiful beaches, the island does not provide a diverse selection of activities. As a result, few people choose to live there. Individuals who are considering this, however, have options. Grand Cayman necessitates a financial commitment of approximately $600,000, of which $300,000 must be utilized for real estate. A yearly salary of around $150,000 is also required. To live on the smaller islands, the investment is half as much, $300,000, and the annual income is only $100,000. Number 3. Singapore. Singapore, which is located in the Southeast Asian Sea and is nicknamed the Little Red Dot because it cannot be seen on most maps, appears inconspicuous at first glance. Singapore, on the other hand, defied all expectations and grew to prominence as one of the world's most important and interesting business and cultural centers. Singapore is a city to consider if you want to mix with some of the world's most powerful people while simultaneously enjoying a stable political environment, first-rate healthcare, and efficient transportation infrastructure. If you want to live there and have around $2 million, you can apply for a residency permit under their Global Investor Program. This can take 2 forms. You can put the money in a fund or you can use it to start and run a business. Number 2. The UAE. There is no better place than the UAE for those seeking the best of everything, including a very simple residency visa and no income tax. You can even choose the type of ambience you encounter on a daily basis, as the 2 main cities of Dubai and Abu Dhabi have distinct personalities. Dubai, as described in our Expat guide, is primarily centered on the entertainment lifestyle. Abu Dhabi, on the other hand, is more old money, traditional, quieter, and less crowded. Number 1. Switzerland. Switzerland made the list because there is no capital gains tax on securities trades. Gains from the sale of private property are not federally taxable, whereas gains from the sale of commercial property are taxed as income taxes. On both categories of property, cantonal and municipal taxes are levied. Switzerland taxes capital gains on other investments and stocks if you trade for a living, but there are no capital gains otherwise. Furthermore, foreigners may be able to take advantage of a flat tax structure, which might cut their capital gains tax even if they trade for a living. With Switzerland's progressive taxation, the longer you own a property, the lower the tax. For removable property, canton-level restrictions apply, with tax burdens varying from 25% to 50%. That's a wrap on the video. I hope you liked it. If you did, let me know by giving it a thumbs up, and do not forget to subscribe. Thanks for watching. See you next time.